First reason is the uncertainty right now about defaults and arrears, meaning are people going to miss their payments or are people going to walk away from their houses completely? And the lender's biggest concern right now is that people are able to pay their bills. And what they're going to do or need to do in the interim is offset the cost of that risk with higher rates during this uncertain time. Plus, we cannot forget the administrative costs to field all these issues and phone calls that people are getting into every single lender and bank right now to try and defer their mortgage while we're trying to figure out what's going on, so people can hold on to their finances to pay for emergency situations. The second issue for why rates are going higher, even though the Bank of Canada rate is going lower, is an issue with liquidity, meaning the banks having enough liquid assets to re-lend out to borrowers. And why that's an issue, which I can't drag out in this video, but how banks, very simple, how they lend money is through what's called insured mortgages and non-insured mortgages. Insured mortgages are easy. This money was actually borrowed from the Bank of Canada, which they go re-lend again. And because it's insured under CMHC Canada, there's no risk. It's protected by the government. They have underwriting guidelines that protect that, and that money is lent, no problem. Non-insured mortgages. These are mortgages that banks actually put on what's called their balance sheet. So your checking account, my checking account, our TFSA, etc., whatever money's in those accounts gets re-lent out to the borrowers. But since liquidity is an issue with those non-insured mortgages right now, meaning the uncertainty of how much money is going to be left because people aren't making money right now, they have risk with liquidity. So that's why rates are going up. However, the Bank of Canada did introduce an announcement in the last couple of days where they're taking $50 billion and converting those non-insured mortgages with the banks and converting them into insured mortgages. This now frees up the non-insured potential for them to reuse the balance sheet of those funds that they currently have with their investors or with their clients that they currently have at their banks and credit unions, etc. So that should be a long-term answer to solve the problem. But for now, that's why the rate is creeping up, because we keep using the term, it's unprecedented and it's too uncertain of what things are happening right now.